Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ, coming to you live from Exchange in Miami. Joining me for this segment, we have Rob Harvey, Vice President and Co-Head of Product Specialists at Dimensional Fund Advisors. We're here to discuss the competitive ETF landscape and class exemptive relief. It is great to have you with us, Rob. Welcome to Trade Talks.
Yeah, great to be here. Thanks for having me.
All right, you got it. And of course, hot topic here is active ETF, certainly has been over the past couple of years, and it's really swelling with the ranks of new issuers. How does Dimensional think about the ongoing opportunities and staying competitive in what is an increasingly crowded space?
No, you're absolutely right. It's an incredibly competitive landscape right now. We've seen hundreds of ETFs launch last year. We've also seen hundreds of ETFs close last year, though. So it's not a business where you can just get in, throw some spaghetti at the wall and see what happens. You really need to have a good idea about how you're going to add value, because if you don't, you won't survive. Good funds don't close. And as I said before, hundreds of funds closed last year. So it's competitive. But one thing that we always go back to is there a reason why your fund should outperform? What are you basing that off of? We have a track record of over 40 years of delivering outperformance across our fund suite, well-diversified, low-cost strategies. That's something that ports over really well into the active ETF space. We've seen a lot of demand from that from investors. And
of course, for decades, ETFs have been dominated by indexing strategies that offer the broad diversification for a low fee. How does Dimensional compete with these larger passive managers?
A lot of times we get confused with passive managers because of the fees and diversification. I think investors find themselves kind of having to make a tough decision between passive strategies or index strategies that are low cost and well diversified, but are only going to ever perform as good as the benchmark, if not a little bit worse because of the fees. And then you also have to choose between that and traditional stock picking active management, which traditionally hasn't done very well versus its benchmarks. And that's really our opportunity, that sweet spot right down the middle where you can combine the best of both worlds. You've got the diversification and the low cost, but unlike traditional active managers, you have a track record that shows the majority of the product suite actually does outperform throughout time. Very attractive for investors.
And you've kind of been in the middle of all these trends because you were one of the first managers to apply for the exemptive relief.
That's right.
To offer the ETF share classes to its U.S. mutual funds. Morgan Stanley's done it, First Trust has done it.
Yes.
Joining more recently, why do you think this potential approval would be valuable for investors?
Well, the case that we've made in particular is really about the fact that it benefits both mutual fund and ETF shareholders. For Dimensional in particular, it's the way that you think about, well, what does the turnover in those strategies result in? Is that actually going to be useful for shareholders in both vehicles? ETFs, people know obviously the more liquidity the better, right? You've got tighter spreads, you want liquidity and depth in the secondary market. In mutual funds, when you have trading activity that happens because you've got applications and redemptions going back and forth, can you utilize that trading activity to benefit the actual portfolio that is seeing the flows come in and out? At Dimensional, the answer is absolutely yes. We have a tremendous amount of flexibility in our process. That means we're constantly improving our portfolio's characteristics as we see trades go back and forth. That's really the case that we've made to say, hey, exemptive relief, particularly for Dimensional, is going to be very valuable, and it's something that we know is very desired by investors as well.
And should the approval go through, and these share classes do exist, for, let's call it the retail investor, does it make a difference, like within the funds that I hold? Will we see anything different? Will it impact the investment?
Not at Dimensional, it won't. I mean, you're talking about, even if you look at an ETF structure and a mutual fund structure that are separate vehicles, you're getting an extremely similar investment experience at Dimensional. So you're taking the same great ideas you had in the mutual fund, porting them to the ETF. When you're looking at share classes, it's going to be exactly the same product. So really nothing changes from that standpoint. It's just more flexibility. It's empowering investor choice. So it's ultimately a win for investors.
I appreciate the insight, Rob. Thanks for joining us on Trade Talks. And thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.